My name's Christian, and if you've got any questions at all, feel free to let me know, or you can stick them in the chat, and then we'll get to them as we go through everything here. So I wanted to start off with this article, which I think really hits the nail on the head. You know, multifamily investment is going to go on the blockchain sooner rather than later. There'll probably be a large migration that happens over the next couple of years. Real estate as a whole really lends itself to the blockchain and the decentralized ledger. So unfortunately, you know, with the way legacy systems work and the way things have been done for the last 100 years, and everybody who has their hands in the pie of the real estate transaction, it tends to take a lot longer to get these things done than it probably should. But we can eliminate a lot of friction and a lot of costs that are involved with a real estate transaction. Also, to be able to sell ownership interest in real estate much easier. Typically, you know, with any other transaction, you have a buyer who says, "Hey, I'd like to buy that," and the seller says, "Great, I'll sell it to you for this amount." They make an agreement. You know, everything changes hands and everybody's happy. In real estate, though, as we all know, that never happens. So, you know, there's a lot more that goes into it. But with some of the new technology and some of the blockchains that are out there and some of the new things that are coming along, I think there'll be a really cool transfer of ownership and transfer of centralization from away from the county recorder where you have to go down and record a deed to a blockchain where you can see everything about the property. And the cool thing about blockchains as well is that you can have public information and you can have private information. So, you know, when it comes to that, there is some, you know, privacy that can be integrated into the blockchain as well, that allow people to have some flexibility with what is seen and what is not seen. When it comes to non-fungible tokens and real estate investing, it's almost ideal. Non-fungible tokens, if you're not aware, I'll go into a little video next, but it's a great way to record a transaction on the blockchain and to be able to display ownership. So there's a Forbes article right here that goes into kind of what that is.
Sales now topping $500 billion. NFT. It stands for non-fungible token. Fungible items can be substituted or exchanged for similar items, like a $10 bill exchanged for two $5 bills. But non-fungible means it cannot be replicated or traded, like a diamond or an original painting, which each have very specific unique qualities. Many digital assets are now being sold as NFTs. And some of them cost a surprising amount of money. NFTs are backed by blockchain technology that prove ownership. Anyone buying an NFT receives a file with a permanent digital signature, guaranteeing ownership. Owning an NFT can be compared to owning an original Picasso. Sure, anyone can Google and look at the work, but just one person holds the ownership bragging rights.
Is this really going to be the future, or is it just a fad?
It's too soon to say, but one thing is clear. People are definitely willing to pay top dollar to own one.
Use Rakuten to get cash back in store and online.
So I thought that was a really good overview of how NFTs work and the marketplaces that are starting to come online now that allow people to trade NFTs on just about anything. You can mint them on different blockchains depending on what you're trying to accomplish and sell them to just about anybody for any type of cryptocurrency now. And it's really become more and more popular, especially in the beginning of this year where it just exploded. And I believe in the first part of 2021, $2.5 billion of NFTs were sold. So it's starting to really get a lot more acceptance. So assets and smart contracts in real estate is a big deal. And this is a blockchain called Algorand. If you're not familiar with it, Algorand is a smart contract blockchain similar to Ethereum. There's other ones that are out there. There's Polkadot, which is being developed, Solana, Cardano, but they allow you to run a contract in a program and then record the results onto the blockchain. So it allows for a lot more functionality than used to be able to be accomplished with just your typical smart chain that people think of, like a Bitcoin, which is just a ledger entry. Now you can actually have an entire smart contract and all of the logic that's behind that incorporated into the blockchain as well. And there's some great articles about how smart contracts are really going to affect real estate in a lot of different ways, from escrow to transactions and everything in between. Here's a blockchain that I just came across that I wasn't even aware of, called Oodles, which actually just focuses mainly on real estate transactions and how to get that settlement portion incorporated into the blockchain. So they really are focused on eliminating the escrow and the escrow officer's responsibility and allowing the transaction to happen without all of the typical back and forth and he said, she said that goes into any transaction. With a smart contract, you can say, hey, this person's going to buy this person's going to sell this. These are the 10 things that need to happen in between. And once they do, you've got the transaction that happens, the monetary values exchanged to one person, the contract or deed is sent to the other person, and then the settlement happens. So with smart contracts and blockchains that are getting created like Oodles, you now have the ability to run your escrow and get your settlement done all in one place. They're using Ethereum and the Ether token in order to settle their contracts right now. And it's interesting. I mean, I'm going to do some more research on this myself, but I really like the concept of having the contract and the escrow all happening in one place. So I guess a question always comes up is, can you use, a Bitcoin to buy a house? And you definitely can, but it's a little bit more difficult than it probably needs to be. Most settlements happen with, US dollars. So Bitcoins have to be exchanged back and forth. But I thought this was an interesting article that was on the Rocket Mortgage homepage that talks about, can you use Bitcoin to buy a house? Yeah, you can, but there are definitely some implications that need to be looked at. But when you have a site like Rocket Mortgage that focuses mainly on, what's happening in the U.S. and creating finance programs around it, there will be finance that happens too around the blockchain where you can trade cryptocurrencies or leverage them. So if you've got, $1 million in Bitcoin, you may be able to pledge that and get a loan for, $2 million in order to buy a house. It's interesting things that are happening, and this Rocket Mortgage article is just a little bit of that. Our website and what we do is we invest in multifamily apartments and units all throughout the country. We do syndications, and one of the cool things about syndicating different real estate investment opportunities is that we invite people from different walks of life in order to be able to invest in real estate. Now with NFTs and smart contracts and things like that, I wanted to go into kind of a real world example of what that might look like. Here's a real estate offering that we're doing right now in Orlando, Florida. So it's a brand new built complex. A little bit of the overview is that it's 348 units, about $100 million purchase price. There's going to be about $25 million worth of investor equity in the project and about $73 million worth of debt. So we're raising about $25 million in order to purchase the building, and we can basically issue NFTs for that amount. So everybody who invests would have an ownership interest in a non-fungible token. And if we were to issue 25,563 of those tokens, then basically everybody would have a $1 token. The nice thing about this real estate investment is that we expect the cap return to be about 2.2 times at the end of 5 years. So this equity should transform from 25 million into 50 million or more by the end of that 5-year time frame. So everybody's non-fungible token then would probably go up from a $1 value to a $2 or more value at that time. But since you have that NFT, you also have that ability to sell that to a third party at any point that you want to. So instead of having to wait through the entire transaction, you have the ability to leverage that equity at any point and be able to sell out of it or to buy somebody else's shares if you believe it's going to do more. Just an interesting real world case study on how NFTs and the blockchain may work. So that's my presentation. I just wanted to go through everything, but if you have any questions at all or you wanted to chat about NFTs or blockchain or smart contracts or what's happening, that's great. And if you could, at the end of this, leave a comment, a review, and make sure to let me know if you're, investing in other multifamily properties, and how you're buying them, how you're selling them, and what the cap rates are. I had a chance to chat for a little bit before this happened, and the prices in California are absolutely incredibly insane right now, but we're finding some decent deals in other parts of the country, mainly Texas and Arkansas, parts of Tennessee and Kentucky. So the cap rates tend to be a little bit higher there, and we're finding that we can get decent returns for people and have a much higher upside as far as the value add component goes. So I'll open it up to everybody who's here. If you've got any questions at all, maybe for the next 5 or 10 minutes, we can chat for a little bit. Anybody have any questions? Do you have them all in California, or where are yours located?
No, I got out of it. I actually got out of it. And the reason I got out of it, you're familiar with Berkadia?
No, where's that?
Berkadia is actually a broker. They're a multifamily broker. They're the largest. They normally deal with A and B stuff only.
Okay.
And I put together a 1,000-door portfolio to it was diversified geographically.
Uh-huh.
And, as this thing went through the roof, I found I didn't even want to be a part of it anymore, because the rents are just going through the roof. When the term value add, what that really is, every time we trade, we just raise the rents 2 or 3%. So we're trading, right? You're
Right.
selling, buying, selling, trading. So every time you buy and sell a multifamily, and after the depreciation, as you know, the tax structure is set so that you really do need to trade it, right?
Right.
That's really what it's all about. And so because of the tax structure with depreciation, there's the constant need to trade, which means there's always doors available.
Mm-hmm.
But what that also is value add. So let's just keep raising the rents. And so whether it's clean or it needs some work, it's all about raising. And so today, I mean, my God, people are paying an arm and a leg to rent apartments. And I'm like, Jesus, are you kidding me? For a 1-bedroom, that's what they're charging.
Right.
And then for the 2-bedroom, I got to the point where I said, I don't want to be part of stealing people's money to the point where they can barely afford to live.
Mm-hmm.
And the last conversation I had with Berkadia in Woodland Hills, I lived in Thousand Oaks for the last 22 years. So in Woodland Hills was the highest producer for Berkadia in the country. This guy was selling, brokering, in the middle of deals, more doors than anybody else in the country. So we had a really good conversation at his office, and he even said, man, I don't know if I can keep doing this. Because you're just keeping upping. You're participating in a game that is taking, every cent out of people's pocket. They have barely enough money to do anything. So that was one of the reasons I actually got out of it. But on what you're talking about, it is interesting, but it would be interesting to see where it's at, because what they were working on, I remember, was basically anything is an entity. And once that entity, let's just say it's a multifamily complex, that entity is there. And then the owners can come and go and can get pieces of, once that entity is structured right. If I remember right, that's what the goal was. And then to be able to get in and out through Bitcoin. I think that's where they were going with all of that. And if I remember right, there was a lot of issues. Some countries were closing it down, especially China. They said, holy shit, this is a mess. But then slowly but surely, I know Wall Street was slow to get into it, but now more and more Wall Street, the big players are getting in. And they are getting in a big way. But the real question I have is just how stable is it? Like this thing you're doing in Florida, I guess I should ask, what is your relationship with it? Are you just one entity, one of many, and who's actually set that structure up with that particular complex? Who's that entity,
Yeah, so that one we're probably purchasing it just the way that we have in the past, which is through an LLC syndication, similar to what it sounds like you've done. We usually hold properties for about 10 years. In that time frame, we attempt to refinance and get all of the capital contributions out of the complex and return them to all the investors. So at that point, all of the returns are infinite, as you know, when you have no capital that's at risk. Once we've done that, then we're pretty golden. We can allow people to share or to sell their ownership interest at any point in the LLC, or if we decide to sell it at some point in the future, then we can obviously do that and distribute the profits accordingly. But with NFTs, what I really like is that, what you were hitting on, governments have some ability, but with decentralized ledgers, they don't have the ability to govern what you own, what I own, what anybody owns. We have a wallet, and it works in such a way that we have a unique identifier that's usually like 26 characters or so that looks like a bunch of gibberish. But when you have a secret key, you have your own wallet that's outside of the internet. You can get a cold wallet storage, and then you can store your tokens actually in that wallet and put it in a safe deposit box or someplace safe. And then at that point, those tokens basically become yours, right? They're impossible to take away from you. So even if you had a country or an entity or somebody was to win a judgment, it's impossible for them to seize an asset like that, right? And so that's the thing that really frustrates governments, is that they don't have any way to control it. But also too, what it gives you is the ability to buy and sell just that portion of what you own at any point. So like you were mentioning, instead of having to trade in and out of assets every 5 years or every 10 years so that you fulfill the mission of that investment vehicle that you're in, now you have the ability to buy and sell that non-fungible token at any time. Is it going to be as liquid as something that was traded in an exchange? No, definitely. But at least you do have that ownership, right? And you can say, hey, here's the building I own. Here's the 0.2% interest of it. And now I can trade that to you for cryptocurrency or another property or whatever that looks like that you really want to trade in and out of. The nice thing too that you spoke about is that at that point, it's no longer a taxable event, right? Because you're basically trading from one thing to the other. You're not recognizing a gain. And that's one of the things that we want to really try to avoid too when it comes to real estate, is how do we avoid having that taxable event? And usually if you're in a single asset entity, you can basically do a 1031 exchange, or hopefully have some way to mitigate that tax consequence. But when it comes to a syndication and you have a distribution event and everybody gets their K1s at the end of the year, then you usually have to pay on the appreciation that you saw during that investment period. So there's a couple of added benefits that crypto lends to that really the real estate community can take advantage of. And I think that as people start to go in that direction, I've seen a few projects where people have tried to or have attempted to sell properties as a non-fungible token or as an asset offering. I don't know exactly how they went, but there was some announcements that were made on different CNBC and Forbes and those kind of publications. But there are going to be some really cool developments that happen over the next couple of years, I think, as this starts to gain more traction. As I mentioned, the NFT market just exploded the beginning of this year, $2.5 billion. And, there's artwork selling for millions and millions of dollars. And, even auction houses like Sotheby's now are offering NFT auctions, which I didn't think that the adoption would get seen that quickly. So we're looking at ways that we can possibly start to integrate these types of blockchain opportunities into some of the real estate syndications that we're doing, but we're not quite there yet either. They're just traditional in most senses, where we're getting an investment group in, we're purchasing. Like I said, we're looking to refi at some point in the future, return capital, and then have a appreciating asset that goes on for hopefully in perpetuity.
Okay, so that's what I wanted to clarify is that you're talking about the NFTs and the blockchain but you're not there yet. You're not actually you don't have that in place. You're doing traditional at this
Yeah,
point.
no,
Okay.
I'm
All right.
definitely, yeah, our group
Okay.
is not there yet. I think that
Okay.
most people are probably not quite to that point where they're able to do an NFT offering. Some of the large hedge funds are probably looking into it and giving people an opportunity to invest. But for the most part, I think the regular, Joe investor that owns a couple of apartments or multifamily buildings, it's going to happen down the road. It's probably going to be 5 years plus until we start seeing it become more mainstream.
Yeah, because what I heard is keep an eye on legislation. Keep a real close eye on legislation, because a lot of this blockchain stuff, it really is designed to take government out of the loop. You can, like you were saying, in the transaction, a lot of the government components are completely eliminated. And that is not something they're going to be happy about, because they want oversight and they want all those fees that they can grab. And so they're losing all those fees with this. And so at some point, legislation, federal and state, can just come in and say, hey, you've created something here that takes us out of the loop. We're just going to make it illegal. And that's what I understand is what's really where it's going. Is that as they get more up to speed with it, that will come in. Go ahead, Seth. I'm sorry.
No problem. I just wanted to add on to what you're saying. It's a valid point for sure. My name is Seth. I'm a investor, and I run a small holding company for multifamily assets. Sorry, I'm breathing hard. I'm trying to get a workout over lunch too. But it's great to meet you. I came in a little bit late, but to your point, NFTs are a bit different than cryptocurrency. So I think regulation is always a threat, but the NFTs are basically just a digital marking of a tangible product in this scenario. So which is different than kind of questioning the utility versus security issue that is more prevalent in the in the cryptocurrency space. So something that's interesting. And Christian, I want to ask you too. So sounds like you're kind of at the beginning stages of this too. Have you dealt with? I assume all your projects are 506(b)(c)s and for credited folks and going forward with that. And so you're dealing with the SEC pretty consistently. Are you considering implementing an NFT kind of refinance process into a project like this, or is that something that you're just like, no, we'll keep this one straight and then start it up on in a couple of years from another project?
Yeah, I think what we're going to probably do, Seth, is to look for a good test project that's going to really allow it to lend itself to the NFT process, and also to keep educating myself on what's available and what's out there, because there are so many different blockchains and more that just keep getting online every day, it seems like. And some of them are extremely beneficial and lend themselves to NFTs and the real estate process as a whole. And some of them aren't as much. So I'm constantly trying to educate myself on what's available and how we can do things more efficiently and hopefully be able to capitalize on the technology that's there. But I think that we're probably about a year off, I'd say, until we have a project and the right group of people. I've spoken to a couple of our investors about potentially doing something similar, but a lot of them are in that same boat of they want to know about regulation. And they're a little bit afraid, there's a lot of fear around it. So they feel comfortable, taking taking their bank account and wiring, $250,000 into the investment fund, but they're not so excited about taking some cryptocurrency and sending it from one wallet to another and getting an NFT in exchange. So that's something that we've got to overcome, and I think we will over time, but it's probably going to take a couple of years to get there.
Yeah, no, absolutely. It's got to get the mainstream adoption for it to be kind of standardized for sure. We have a small 68 unit project in New Orleans that we're in due diligence on right now, that I was kind of wondering, and one of the reasons I want to jump on to this call was to see how far along that would kind of be. It sounds like it's a bit bit early in the process. You don't know of a software or a technology that is doing this already. Then you're just kind of like going, this is the beginning stages, what's possible. Is that where you're at?
Yeah, I think that we're pretty much in that beginning stages. Just as I was starting
Yeah.
to look at things today, I came across a couple of other, projects that I thought made sense as far as, the blockchains that looked like they were using and how things were happening. But where's the one I was looking for here? So this Oodles blockchain, I just seen it. So I'm going to have to do a little bit more research on this myself, but it was a smart contract blockchain. And then Algorand, I don't know if you're familiar with Algorand. I've done a little bit of research on it, but they're a smart contract platform. Obviously Ethereum is the main one right now that uses a lot of smart contracts, but I'm not familiar with anything that's running right now on Ether that allows you to transact real estate or to offer some type of a real estate syndication through an NFT. So I think that'll probably be in the cards, and it's probably something that's getting developed, but I just haven't seen anything that's in the mainstream yet.
Yeah, I'm the same way. I agree. There's an opportunity there for sure. I'm friends with Vitalik's dad, Dimitri, and he's obviously a father, so he just loves his son no matter what, period. But he's not an expert in it, but good guy, and I agree that there's an opportunity for somebody, if they're not already doing it, that's probably the next evolution for sure.
Yeah. There's a lot of smart people that are working in the crypto field, and with all of the brain power that's going into it, I'm sure that it's going to change a lot of the way that we do things in the next couple of years. It's just a question of how quickly that adoption takes place. It seems like everybody knows what Bitcoin is, but Bitcoin has no utility whatsoever. And with Ethereum and a lot of the other blockchains that are getting developed, there's just so many opportunities to change the way that business has been done, from everything from finance to real estate to medicine and healthcare, and it's just it's going to be fun to watch over the next couple of years.
Absolutely.
I had done a significant amount of research into this 3 to 5 years ago. I really rolled up my sleeves, and from what I can see, they still haven't, you might say, figured out the formula. I think that's the best way to describe it.
The market adoption just isn't there. People, like you were saying earlier, people just standard investment practices, people are cautious of already. You add another element in, and that people just don't know, and it's not conventional. It's going to take a while for it to become adopted by the market.
Yeah, in theory, the concept of smart contracts is great. It is.
Yeah, absolutely.
It's a great concept, but there's the follow through and the mechanics of it, and then the legislative side of it, which is where the issues are.
Yeah.
And
the old adage always rings true. Confused mind always says no, right? So.
It's like, because if you dive in now, as what has been happening, there's millions that are disappearing into black holes.
Oh, absolutely.
There's a lot of money that is just all of a sudden evaporated.
I have a cousin of mine who's a senior developer at Google. In about 7 years, he gave me a birthday card that was a crypto wallet from Monero.
Yeah.
And it was a couple $100 at the time. And I was like, dude, I don't know what to do with this. Like, I appreciate it, but I'm gonna give this back to you. And I saw him a couple of weeks ago. I'm like, where did that ever go? He's like, I don't know, but it's probably like 20 grand right now. Just kind of sitting somewhere.
Yeah. I know it's actually insane to see how the prices exploded across the board here. And, we're probably going to see another downturn before we see an upturn, but at some point it's going to be mainstream. And at that point, that'll probably be the time when the smart contracts and the offerings and things start to go mainstream on the blockchain. And I don't know if that'll happen, in a year, 2 years, 5 years, but we're definitely moving in that direction. I love the fact of, being kind of in that realm where you get to see the baby steps that are getting taken. Like I said, the amount of NFTs that have been sold in just this first couple of months of the year has been incredible. And, it's only going to gain steam from here. So I look forward to it. But I
think I'm like you. I'm a bleeding edge thinker, and I have always been in that space in the world that I work, and everybody knows that about me. So that's why I rolled up both sleeves and really dove into this thing, and then recognized what you just said. But even 3 to 5 years ago, I think I need to back off for a while and just let's give it some time and see where it's going to go.
Right.
So
Right.
anyway, so I have the same summary of thoughts as you do on it.
Excellent. Well, I appreciate you guys jumping on, Ray, Seth, Don, and I hope that you got a little bit of info from it. I'd love to keep the conversation going. Feel free to direct message me either from, YouTube or Meetup or, any of the social channels that are out there. And I'm happy to share some of the projects that we've got going. It sounds like, Seth, you've got a deal going on in New Orleans that would be interesting to see as well. So feel free to